Hey, Simplifiers, welcome back to the show. I'm your host, Evan, and today I've got an absolutely fantastic conversation lined up for you. So, there's this common misconception in business that values are just something that you put on your wall or your website, and it's just nice words that sound good, but they don't really impact the day-to-day operations. Well, our guest today is here to completely shatter that notion. And so I'm thrilled to be joined by a friend, Steven. He's an entrepreneur, a real estate investor who has made aligning core values with business operations, not just a philosophy, but a practical strategy that drives every major decision in his companies. So we're talking about hiring, firing, promoting, investing, the works, it's everything. So what I find so compelling about Steven's approach is that he's proven you don't have to choose between being profitable and being principled. So in fact, he's discovered that when your investments and your business operations are truly congruent with your values, both your impact and your returns can be extraordinary. So in today's conversation, we're going to dive deep into faith-driven investing, just explore how Steven has built accountability systems around his values, and discover the tangible ways this approach has transformed his team and his operations. We'll also get into some fascinating territory about community building, supporting nonprofits, and even encouraging homeownership among tenants. Woo! But that's not all. Steven's also going to share some incredible insights about leveraging AI for business efficiency and how he's created custom chatbots and streamlined operations in ways that might surprise you. Plus, we'll explore his involvement in a pro-life fintech initiative that's reimagining intentional banking and investing. So whether you're an entrepreneur trying to figure out how to integrate your values into your business strategy, an investor just looking for ways to make a positive impact without sacrificing returns, or you're just simply someone who believes that business can be a force for good in the world, this episode is marked with actionable insights and inspiring stories. I'm so happy that you're going to be able to hear from Steven. So grab your coffee, settle in, enjoy your drive maybe, and let's jump into this incredible conversation with Steven about building businesses that truly matter. Well, hey, Steven, thank you so much for joining. Glad to see you, man.
Yeah, Evan, thanks for having me, man. Appreciate it.
Absolutely. I've just gotten to know, Steven for a little bit, and just maybe it's been a year or so, I think, and we've just gotten to talk, and I just the thing that I really enjoy about chatting with Steven is just aligning values in every area of life, and that's just something that I see you modeling, I see you talking about, and I'm like, man, let's get the mic on and let's talk more about it, man.
Yeah, for sure. Not talked about enough.
Exactly. What was for you, a pivotal, moment where you're just like, wait, values really matter. It's not just something you put up on the wall. It's something that you want to imprint on your team's heart, your own heart, and the people that you serve.
Yeah. So, I mean, we actually hired some mentors in the past, right, to come in and do some business coaching, and they always start with the same thing. You got to write down your mission, your vision, and your core values, right? And if you haven't done that as a business owner, I don't even believe you're in business. So, you have to start with mission, vision, core values, and we've done this multiple times, and they have tweaked over time, by the way. But it's okay, so we write down our core values as a business. If we write down our core values as a family, which you should also do, and then they get stuck in a drawer and they don't get used every time, who cares, right? And for us, what we learned was core values are things that you hire, fire, promote, and demote on. So those are the things that you literally run your business inside of. And so that's good. Now it's at the forefront. It's shared with all of our people. And, so we're a Christian owned and operated company. Not everybody that works for us or invests with us is a believer. And I always say yet, but that just means that we get to plant seeds and be impactful and be intentional with those folks too. But, the first thing that really hit me about aligning core values and the business, it's always been, we want to build the business so that we can give money. And I think that this is where a lot of Christians or faith-based investors start. Let me go make profit, and with that profit, I could fund good things. And that's absolutely a great place to start. Sure. But what I realized is that in the chase for ROI, you're actually cutting off your core values or not investing in things that align with your worldview. Or worse, you're abdicating the ability of stewardship to a financial advisor who doesn't even tell you what you're investing in. And those things are in direct competition with your core values. And I was like, wow, it's amazing to me that you can actually find places to get a good return and have it align with your core values and your worldview, but nobody's really talking about this. Right. And I'm not sure why. And I think there is a movement right now, by the way. I mean, a massive movement of people that are starting to talk about this. And I'm not talking about the ESG funds that are going out of business because they're doing environmental, social, and governmental things, giving lower returns for what is perceived to be good stuff. I'm talking about real operators and real owners and real investment managers that are focused on kingdom building or focused on faith-driven investing. And there's metrics to it. There's accountability to it. There's transparency about it. Right. And more people, it kind of started with the Bud Light thing, right? I mean, you saw the whole pullback, right? They lost 20% of their stock pricing because of a stupid PR stunt. But it really started to resonate with people who were like, wow, that doesn't align with my core values, so I'm not going to invest in that. And for us, we started thinking like, man, where else do Christians do this, right? And I went and I spoke at an event, and I talked specifically about this. And I actually fasted for days to think about what I was going to speak about. And this was awesome. Kind of the messaging that I got, and I was not impressed. I was like, this is it, Lord? Like, aligning your core values with your investment thesis? Like, for me, that wasn't a big deal, right? But I stood in front of a couple thousand people, and we talked about this in depth. And we started talking about what mutual funds are you invested in. Okay, so that mutual fund owns what companies? What companies do not align with their core values? And then you start thinking, right?
The spider web,
yeah. And you find
the
that
impact.
You realize that as Christians, they're picketing Target on the weekends and they're investing in it through their 401ks or in the weekdays. And it's like, well, how well do you know what you're invested in? And first, I think people buy into the lie, right? The lie that you're not smart enough to manage your own money. So they abdicate that stewardship ability to a financial advisor and they chase return so that they can maybe give later. And it's like, those two things are not mutually exclusive. So I had to repent because it actually turned out to be a pretty impactful message for that group. And I was like, all right, sorry. I didn't recognize that it was going to make that big of an impact. But it's one of those things where it's you can't unring that bell, right? And once you start to think about it, and I got woken up the next morning after I spoke at that event, and I was like convicted because I wasn't doing it. And it wasn't that I wasn't doing it in my investments, but I wasn't doing it in my banking. And this was recent from Roe v. Wade getting overturned, right? And sorry to get down like the conservative rabbit hole with you, but this is just where our lens is. And so Roe v. Wade got overturned, and Chase, Wells Fargo, Bank of America, Citibank all came out and said, we'll pay up to $4,000 a year for an employee to go get an abortion. And I'm putting tens of millions of dollars into Chase Bank. And since COVID, by the way, there's no fractional reserve requirement. So that means that they can leverage that 10, 20, 30, 40, 50, 100 times if they so choose with no oversight. So that meant my tens of millions of dollars that were going in there were being leveraged to create income for a bank that did not align with my core values. And, for me, that's a big needle. Like, none of this is a light switch, right? It's where's the biggest needle that I can move. And then, it's like, so do I still have a Verizon phone? Yes, I do. But, that's my $80 a month bill, not tens of millions of dollars of deposits. Like, let's start to correlate where that goes. So anyway, that was kind of the journey of, man, what else is there, right? And it just starts to open up the Pandora's box of what else do I support with my dollars?
Yep. And then how does that affect your team? How does that improve or, contrast even like the value of a team member coming on, and what happens if they splinter, like.
Yeah. Well, core values again go back to hiring, firing, demoting, and promoting on, right? And that alignment to core values is very simple. We make it very clear up front. I mean, we've been interviewing over the last 6 months. We've hired a few new team members, and there's been a few interviews that they didn't return our calls afterwards, and they were probably a good candidate, but they just didn't like what we stood for. And that's fine, right? I mean, that's not the vision that God gave me for the business, so it's not going to align with everybody, and I totally get that. And in terms of splintering, it's not like they're coming in blind, right? I actually sit down. I'm always the last interview that they have, right? They talk to my CEO, they talk to my business partner, and then they talk to me because I'm the guy doing this, right? I'm the guy on podcasts and on stages and, selling the book, Investing with Purpose, and, just the things that I'm very outspoken about. And I tell every potential team member before they come on, like, hey, I don't need you to agree with what I'm about to say, but I need you to understand that I'm going to be saying it and I'm going to be unapologetic about it. And if that makes you uncomfortable, then you have the right to know up front. And I think they respect that. I think they honor that. And yeah, we just let them know, like, hey, we boldly stand for intentionality and impact and loving on people and serving them. And because we also boldly stand for those things, it means we also boldly stand against some things. Right. And that's easy to get labeled as, pick your media buzzword of the day that makes me less than because I have a biblical worldview. And it's, that's how we've built it. And the team, frankly, grabs onto it and they love it, right? When we go do an apartment acquisition, we closed the largest property by unit count last year in the country. It was 982 units.
Way to go.
But when we looked at that acquisition, it wasn't going, okay, there's a 982 income producing apartment units. Yes, of course, there's a business model behind it that needs to be sound. But we look at that as 982 families we get to go serve and 982 potential families we get to impact in a positive way. And, that changes the dynamic about how we look at doing deals, right? We have such a human aspect to what that looks like. That's what our whole team is focused on. And then it's the operational, like, how are we operating this thing to maximize profit for investors? But at the same time, how do we dovetail that into serving people?
Right. Several years ago, before kids, so a decade plus for us, my wife and I got to be a part of a great organization, and we got to help with lease ups. We got to help with doing events and honestly just building community, which builds retention, and the people want to be there and they want to stay and they want to get to know their neighbors and by facilitating those things. And so how have you set up those types of operational aspects?
Yeah, so we work with Apartment Life as on a lot of our properties. We've also explored doing kind of in-house cares teams to bridge the gap a little bit. But Apartment Life specifically is such a great organization in terms of they've been doing it since the 80s. They're finding great people like yourself to go live on site and to do these biweekly events that just basically show the tenants that you care. And it takes a little bit of time to create some trust because they're like, what is this? What are you trying to do? Why are you giving me pizza and movies under the stars? And but it's such an amazing program and it's a piece of what we do. So, when we started giving, it was giving to outside organizations, and we were giving 1% past the tithe to an organization, 2%, 4%. And, so of net profits. And then, we did that for a couple of years and we supported 35 plus nonprofits around the world. We did some really cool stuff, digging wells in Africa. And I think that's all great, right?
Yeah.
But it was disjointed. It was was supporting somebody else's mission and vision for their nonprofit, which was a blessing to be a part of. Yep. But as we continued to grow and scale, it was like, well, what's the mission of our organization? Mm-hmm. And there's a great mentor of ours. His name is David Snyder, and he's been in business for a long time, believer. And, he commissioned a study that showed that nearly 100 million people in the United States live in multifamily. And 92 to 95% of those people consider themselves unchurched, which means that it doesn't mean that they're not a Christian. It means they can't point to the local church for them to get to. And it was at that moment that I was talking to him that I realized we owned the mission field.
Right.
And why wouldn't we sow back into that? Right. So that's when we started pulling back from giving to other organizations and starting to sow back into our own backyard, into our own tenant base, into our own properties, and see how much we could do. And here's the thing, there's a lot you can do. The apartment life model is great. The biweekly events and the movies on the stars, handing out backpacks for school, and there's so many cool things that they do. But then you take it a step further and you're like, all right, what else can we do? Right. And that's what we're always asking as entrepreneurs, like, well, what else can we do?
Well,
and then you find that the local church actually has an outreach ministry, but they haven't been able to get into your apartment complex because by design, they can't find me as the owner. They can only go talk to the property manager.
Right.
So now we start calling local churches and say, hey, we have this program and this framework, and we would like to maybe invite you guys in to come in and do prayer walks around our complexes on Fridays or Bible studies on Saturdays. And maybe we'll fund the ability for you to get some of the teachers in your congregation to come and do tutoring over the summertime, not for free, but we'll pay them to do it, but we'll do it through your nonprofit because kids that live in multifamily housing historically fall further behind than their single family counterparts. So how do we help that, right? How do we get the single moms that just had a baby, in Every Life gift basket, right? Every Life is a company that is owned by Sarah Gable Seifert, who her husband started Public Square. And they found a gap in the market where every diaper company actually gives to Planned Parenthood, which is a terrible business model, by the way. So Huggies loves, every single one supports abortion. So Sarah started Every Life, and now there's diapers and wipes and things like that we buy from them to make baby baskets to give to moms that have new babies on our complexes. And what else?
Amazing.
What else can we do?
Right.
And so that's the thing, is we're in the people business and people have needs. And, one of our apartment life ministers at one of our complexes was talking to one of the girls at one of our events, and she was 13 years old, and she was like, oh, I have this soccer game on Saturday and I'm super excited, but nobody's going to come. And they went.
Sure.
They went to go support the girl, and they went and they brought some friends from church, and they went to cheer this little girl on. And it's just amazing little things like that really make an impact in somebody's life that we get to be a small part of, which is, it's amazing.
Yeah. Oh, man. Sorry.
That
just got me.
It's good. Like we
Every
have
question that I was going to ask, doesn't matter right now.
I know. And we can talk about some tactical strategy stuff, but we just bought 420 units in Lubbock, Texas, and this is amazing because all those units are separately deeded duplexes. So we have about 210 separately deeded duplexes. So we were just strategizing yesterday on how do we let all the tenants know that we want them to be homeowners, and that we're going to give them, they're going to let them take an application and let them go down this funnel of, okay, if you get past round one and you want to do this, then we're going to give you access to Financial Peace University on us, right? That's so you can start building your credit, so you can start doing the debt stacking thing. You can increase your credit score, increase your income, reduce your debt. And then working with some local, not banks, what are they called? Credit unions, the nonprofit credit unions. Yeah. And talk to them about, okay, what does financing look like for folks that want to own a duplex, right? Because now we can count some of the income on the other side of the duplex towards their income. And how much of a seller concession could I give them as the owner of the property currently so that they can help with down payment assistance? And, especially, widows and orphans and single moms, like how do we get them from a place to where this will be the last place they ever rent? And not only do they move from tenant to homeowner, but they actually move from tenant to landlord and actually have an investable asset now.
Huge upgrade.
Right. So it's amazing. I mean, the net worth average of a homeowner in the United States is like $300,000. A renter, it's less than $11,000. Right. So a huge predictor of wealth accumulation is home ownership. So how do we get people there? Right. And so some might say it's a bad business model, right, of trying to make our places the last place you ever rent. But I think the line out the door will be insane if we give some people some financial education and the tools to go be homeowners while they come and live at our complexes. So, what else? What else is there?
Wow. Who are the people that you're listening to? Who are the people that you're getting great ideas and seeds from, and you're reaping and sowing, and it's impacting yourself personally, it's impacting the business.
Yeah, I mean, from a business perspective, I'm part of a group called Redemptive Real Estate. David Snyder's in it, Community Growth Foundation. Ryan Pauler runs that up, and he's doing a great job of connecting just people that care about how to be redemptive in the real estate world. And it's a bigger movement than you think. I think is mostly entrepreneurs feel like they're on an island in general, but then when you get into the intersection of faith and finance, that even gets a little bit smaller of an island to be on. But there are some amazing operators that, tens of thousands of units, hundreds of millions of dollars of property, that, we're just talking about, hey, what's working? What other levers can we pull? What have you seen that works? And, and that's been an amazing opportunity. Personally, just personal growth is a core value for us. So, we still read a book a week, or, reread the really good ones a couple times. Exactly. Right. I think I read Never Split the Difference like 7 times when I started learning how to sell. So, we're always listening to podcasts, listening to books, reading books, and then who are
your
really
top podcasts right
now? I still listen to Alex Hermosi. He always drops some great bombs. Sharon Srivatsa is, if you don't know Sharon bought TELUS in California for $300 million and turned it around and sold it to Douglas Elliman for $3.4 billion 5 years later. He's now the CEO of Real, which is a publicly traded company with 25,000 real estate agents and $1 billion. So in terms of just smart, he's also in a mastermind of mine. So like, it's That's great awesome. To get free information from him. But yeah, those two are kind of the personal growth, business growth, podcast type things that I listen to. And then always reading different. I have an 11-year-old, a 7-year-old, and a 5-year-old. So growing up in this world, I'm always looking at parenting books and, how do we give our kids the tools that they need to survive in a society that is overwhelmingly stuck to their phone. Right. So, just a couple of things, but I'm a part of Think Media, THINQ. If you look at Think Media, they have some great content just about how to think from a biblical perspective on all these different worldly topics. And I've gotten to speak on their stage a few times, which is a blessing, awesome. About aligning faith and finance. So, yeah, there's a lot, right? We can drown in opportunity. And then I'm trying to spend 60 minutes a day in the AI world, trying to become extremely proficient in that.
Yeah. What sort of things are you discovering?
Well, number one is it's not Google. We think, I think, very rudimentary level about what it is and what it should be able to do. But yeah, we've learned from some really great mentors of ours, like, you have to think AI first. You have to be looking at it as a tool, not a replacement for your brain power, but for efficiency. Right. Which it's limited by the way that you understand how to utilize it, right? So, can it tell me the best microphone that I need for my podcast? Yes. Now, can I tell it to be a podcast expert and tell me all of the equipment to buy and a launch strategy with step-by-step instructions, what platforms to use and what to do and give me the first 5 scripts for the launch, yes, it can.
Yes.
So, it's just, I think we're just compelled to use it in the way that we always have, but this is the retraining of our brain time frame of saying, okay, this is something different. And if we don't get on board, right, this is Leo Chen, who was one of our mentors in this. He does a lot of AI stuff. We did an intensive with him, and one of the things that hit me the hardest was, if you remember all the companies that went out of business after the dot-com bubble because they didn't either grab on board or understand that the internet was going to be around for a long time. This is moving 10 times faster than that.
Absolutely.
So to understand that should be a wake-up call to business owners that it's not if, but when you're going to need to use this. And it can make you super efficient. I mean, you basically have an executive assistant for $20 a month. It's ridiculous.
Right. So one thing that I love from Dan Martell is he's in SaaS, but there's a lot of crossover in just the way that he approaches business that I just really like. And one of the things he talks about is the 10-80-10 rule. And whether this is delegating to a real assistant or an AI assistant, you want to give the first 10% the vision. And these are the frameworks, and these are the great questions that I want for you to answer. And these are the things, this is how I want you to be able to do it. And then you delegate that off to your assistant, could be Grok, could be ChatGPT.
Right.
But you want for them to go 80% down the field and get into the red zone, right? It's to the place that you can be able to take the last 10% and go, oh, I need to tweak these things. The language isn't quite right, and it doesn't actually speak to the audience perfectly. We already do that part. Let me just edit this part out. Let me simplify this, edge it down. And then you're able to, to score the touchdown or the field goal that you need. But, you did really only 20%, which is back to the Perry Marshall's 80-20 for sales and marketing. And the assistant, whether they were real or AI, went down 80%. You were able to get it done faster, but it was able to use your vision, your frameworks, answering the questions that you really wanted. And then you're able to come back and make it better and then score. So
it's a fun
how do you do that?
Yeah, I mean, one, you have to identify what repetitive tasks you're doing or what, you think that you need to get done on a consistent basis. And then, I think taking the time instead of just sitting down and getting into the app and like typing it, like actually writing it down on a piece of paper of like, what is my outcome? What am I trying to accomplish? Okay, now let me use the craft formula to create the context and, really, really give it the direction that I want it to, and then let it run, and then go back and edit it from a perspective of, is this doing exactly what I want to? And there's 2 ways of editing, right? There's retelling it, something more specific what to do, or just reading it yourself and crossing some things out. And but it's just an extreme efficiency tool.
Yeah. And then how are you implementing it within your team? You kind of said a little bit earlier before we hit record, and I kind of wanted to going to go there.
Well, so we're gonna do kind of a couple hour intensive next Friday or 2 Fridays from now, I forget, to where we're just gonna be talking to the team about hey, think AI first. Here's some homework. Here's some time that you should be spending on growing in this because it's amazing. Like, you can create your own agents right now to do things. In 6 months, you're going to be able to buy your own agents to do things because other people are going to be a little bit far ahead. You're going to be able to spend the money on it and just do it. But especially in our team, I'm not a big fan of like just holding stuff back because I think other people are going to do it. Like, go do it.
Right.
Most of them won't anyway. Yeah. Most people won't. But the fact, I have years of data, right? I have years of podcasts. I have a whole Dropbox. Like, I can take all of those things and create an essentially Ask Steven chatbot, right? To where you can ask me anything as if I was sitting in the room. And if I've talked about it publicly, or there's a transcript about it, or it's in my book, or it's anywhere, right, then it's going to be able to give you answers like you're talking to me. And then every time you create new content, you just continue to feed the machine,
Feed
right?
it. Yeah.
So that's my first thing that I'm looking to do, is just create a kind of ask me bot, which I think would be fun. And then there's other, like Notion, for example, is a cool AI
Notion.
tool where it'll tie together your Dropbox, your Google Drive, like your Slack, your Loom videos, your Zoom videos. So like you can start attaching all of these things, and now you have one place where I can say, hey, Evan, how are we making progress on that 318 unit acquisition? Where are we at? And it'll give me the latest updates from all of these different places. Right. So again, efficiency. I don't know if you guys have ever gone down the Dropbox rabbit hole, but like you're trying to find a document, and I have 42 operating agreements. So when I search operating agreement, it's not helpful. So, it's just, it's helpful. I'm excited for what it will be and what it can be. And, it's still so fresh, but, I think, I've heard from guys that run publicly traded companies that their AI budget is 30, 40, 50 million dollars this year. And they're not doing that because they think it could be cool. They're doing that because they know it's going to make them more money.
Right. Yeah, it's great you're doing that with your employees and just saying, look, you need to develop time in your calendar to do this. I think about Gmail. I think about, like, there are so many things that Google would do that, like, okay, 80% of what you're doing is going to be from your manager. 20% is going to be things that you want to explore. Gmail came out of that. I've got a friend who's, I remember in 2018, 2019, she was talking about machine learning. And I was like, what? Oh yeah. She's got like a doctorate. She's been going hard. And, it's just like, oh, now we all know what it's built from that. Right. And so, giving the directives, and then saying, okay, do what your job is, but also contribute. And I want you to bring new ideas, bring new, problems to the table. And then what are solutions? And how can we improve our human experience, leveraging AI?
Yeah. No, it's going to be neat. So, and then, further into the business side of things, like we're not there yet, but it will start to model properties for you. It will start to automatically pull comps from CoStar for you. It will be able to aggregate data and give recommendations as to, I'm looking at 10 deals, what's the top one, and give me the reasons why. So there's a lot coming that I think will be used. But again, that 10-80-10 rule is fantastic, because somebody did send my business partner some underwriting, and they didn't do the last 10%. So it was an AI underwrite, and one of the deals that got pulled into it for comps just didn't make any sense, right? But they started to use that as the average rent per square foot, and it threw the whole data set off. Just make sure you double check that before you start sending it to fund managers like us, right? Because we are going to dig into it.
So what sort of deals are you looking for right now?
Yeah. So, interest rates have come down every week since Trump's been in office. So we're starting to see some loosening, I think, in terms of interest rates. There might be a little bit of a forced recession with this tariff conversation, which will lower interest rates, which, not conspiracy theorist one way or the other about how that's going to look, but I like lower rates and I like depreciation. So if the tax code gets written into, if they extend the tax cuts from 2017 and we get lower interest rates, great. I think in 2024, things were still trading, at least in Q4, for like a 5.5% cap rate. So still seeing strong cap rates. We are starting to see more mortgage defaults. So you're seeing a lot of recapitalizations instead of chargebacks and charge-offs, which is interesting. So, what we're focused on right now is, we're seeing some screaming good development deals. And if we can rate cap those enough on a floating margin, then I think we'd be okay stepping back into the development world. We stopped during that crazy interest rate spike.
Sure. Lumber
But
was
what
so
we
expensive.
really
You know?
like, yeah, exactly. What we really like is, we're $30 to $50 million acquisition. I mean, we did one that was over 200 million last year, but those are unicorns. But that 30 to $50 million acquisition size, $10 million equity check size is what we like to, put out. Existing cash flowing multifamily with some upside based on light value add. Like, we're not looking to go in and tear down and
Right.
rebuild. We're looking for strong occupancy so we can get strong fixed debt terms, so we can go in and on lease attrition, go put in the LVP and the granite countertops, and then increase rents to where market should be because we bought it where it's 15 to 20% below market. And then you have a pretty predictable business model. But we get to kiss a lot of frogs. We have a lot of really solid institutional investors that send us deals on a weekly basis. So our pipeline is full, and we get to cherry pick the absolute best ones. And that's, I think, where we get to win is we get to make money on the buy.
Right. Are there any
But
other asset
we
classes?
do have.
Oh, good.
Yeah, I was gonna say we do have some student housing, only at Division I football schools, because we believe that education is inherently changing, but you can't replicate that football Saturday at some of these southern schools. Louisiana State University is one that we own, and that's been a fantastic asset for us. And we are interviewing some senior operators now. So, our structure is where we're the fund manager, and our fund comes in as the full LP check writer, and then we co-GP the deal with an operator. And that's been a great model for us and our partners. And, we know, we've all read about, the silver tsunami. We understand that that senior is going to continue to be an asset class that is going to be good. But I see a lot of multifamily guys pivoting into senior, and it's a very different business, right?
Right.
Similar to a multifamily guy just deciding that he's going to become a hotelier, like except with much higher insurances, and now you need nurse practitioners and you need medical licenses and that kind of stuff. So we love the space, but we don't pretend to be experts in it, and we're not going to. So we're trying to seek out the operators that have a track record that's beyond, the last couple of years when everybody started talking about it. So yeah, those are the three asset classes that we're really focused on. We can also do storage because we've built about 500,000 square feet of storage. But I won't say that train has left the station completely, but when we got into it 7-8 years ago, it was really a great time to be in it. Now it's pretty saturated.
Yeah. Land was a completely different story back then.
Yeah, no doubt. Especially land in Florida. We built, a bunch of stuff in Florida. Our price per acre was significantly lower basis.
Oh, yeah. Oh, man. I'm just trying to think of our time. I'm going to edit this part out, but I just wanted to see is there anything else you want to touch on?
No, I mean, we touched on macroeconomics, right?
Yep.
We touched on some of the team. I don't know what else your listeners are
Let's see.
interested in.
Yeah. What would be, just like a leadership, let me start over. So like, what's one kind of final leadership advice that you'd like to share? And, as it relates to the current economy, it could be related to values, but just something that someone could be able to take and run with.
I think this season, especially over the last couple of years, is, it's always too early to quit. The whole idea of 3 feet from gold. I've seen a lot of people where I think they're going to regret quitting during this season because, I think there's a lot of good stuff to come. I love the Lombardi quote, "The man on top of the mountain didn't land there." Like, I was with some entrepreneurs recently at an event, and it was so interesting because they started some businesses, and one of them goes, "Man, this is hard." And I thought about it for a minute, And I said, well, who's the idiot that told you it was easy?
Right. Who lied to you? Like,
but I think that this is a potential like downfall of the social media guru and the YouTube gurus of today. And not that it all lies on them, right? But that it's our consumptive, judgmental, like everything I see is matter of fact, and like that's real. I mean, I think I read a study where 70% of kids thought that they were going to be a millionaire by the time they were 25 in high school. This was like a high school survey. Sure. And I'm like, what are you, on crack?
Right.
So I think that there has become, especially with like YouTube stars and social media stars and influencers and stuff, there seems to be this idea that it's going to be easy. And nobody said it was going to be easy, but you should know it'll be worth it, but you're going to have to push through a lot of pain and growing pains. And I think another question that you sent me via email was like, how do you shortcut that pain? And I think there's really only two ways. Like, you're gonna pay for it both ways.
One way or the another.
One way is through mentorship of people that are further than you, and the other way is through making your own mistakes and just losing money and what they call the dumb tax. Right. Exactly. Right. Keith Cunningham wrote a fantastic book called "The Road Less Stupid," and he talks about the dumb tax, and that's what it is. It's we've paid them. We all have as entrepreneurs in one way or the other. And then when you get over it, you're like, oh man, I should have known that. But you don't, because why would you know everything? Right. So, I think from a leadership perspective, I think number one is identifying your core values and your why is such a big piece of why you're doing something. Because if it's not bigger than the money or bigger than whatever makes you get up out of bed in the morning, you're not going to do it, right? You're not going to persevere through those times. There's a reason that Elon Musk said entrepreneurship is like staring into the abyss and chewing glass. It's not easy. No. But is your why worth it, right? And so I think that from just a very basic like entrepreneurial level is where you need to start. If you're further along than that, growth should be a core value. You should there is no neutral, right? You're either growing or dying. So I think making sure that you set that example for your team and hold them accountable to doing it as well, and making it exciting and fun, because growth is fun. Like, you don't want to stay stagnant. I think there's a lot of potential entrepreneurs out there that say, once I get to here, I'll be good. It's like, well, once you get to here, you either sell or you start moving backwards, because if you're not continuing to move forwards, it's going to be a problem. Right. But yeah, so I think paying for mentorship has been huge for us. We've probably paid over the years 7 figures plus in mentoring. I mean, I've paid a couple grand for a phone call because it was about to save me $100,000, right? Or $200,000. So I think getting around people that are like-minded, values-driven, the same as you, number one, so you can all be a part of the same vision and row together in the same direction. And then two, recognizing that, what's the quote? Like, done is the enemy of perfect, and then, right. Totally. And then the only thing worse than being curious is being right. Like, if you think like, that's the biggest time to question yourself. Right.
So, do you have time to talk about what you're building with do you want to talk about the coaching program, or do you want to talk about, even if it's just conceptually, or do you want to talk about the decentralizing bank group that you're a part of with Nick?
Oh yeah. We could touch on that since it launched. Probably, when are you releasing this?
Probably maybe a month or so. I don't know. I kind of want to release this one sooner because this is just so good.
So I'll probably hold off on the Fun to Fun programs until we have a little bit more of, less. Right now it's idea phase. So
okay. Let's do this then. And let me just look at my notes real quick. So outside of Integrity Holdings, what are you excited about building? Like what are you a part of, and what's just something that you are looking for, like you said, like-minded people and rowing in the same direction?
Yeah, so going back to the story before where I was kind of convicted about, where we were banking and it not allowing to align with our core values, it set me on this journey of like, man, where do I go and put all this money if banking is a requirement and I don't know where to go? So I called one of our investors who called another guy, and there's kind of 3 points of separation, which was really cool. And he ran a bank, and he's a faith-driven guy. And he has a great testimony about how the bank almost went under in 2008, and then now it's 30x the value that he had when he bought it.
Amazing.
So I started talking to him, and he said, "Well, yeah, so I run this bank." He said, "But I'm actually on the board of a fintech company that my bank is going to be the chartering member for, and it's called Pro Life Fintech." And I said, "All right, that sounds interesting." And he goes, "Well, I'll get more information and I'll let you know about it." And the very next week, I was with the Benham brothers, who are speakers, and they wrote a bunch of books, and they're on my advisory board. So I went to go to an event where they were speaking at, and got backstage with them, and we're hanging out with them. And Nick Vujicic was in the back with them. He was speaking at the event as well. I started talking to Nick, and I said, "Hey, I just spoke to Sean, who's the guy at Regent, and he said that you're launching this bank." And he said, "Well, yeah, we're in the middle of trying to figure out how to do it." And I said, "Well, I want to be a part of it." I said, "Not only do I want to move my accounts there," I said, "but I want a seat at the table, and this is why. This is what we're doing in terms of teaching people to think about where their investments are going, and you're about to do the same thing about thinking where your banking is going." And so I couldn't think of a better way to join those things together. And he was like, "Okay, yeah, let's talk." And anyway, long story short, it's been over a year in the making. And this past week, Charlie Kirk and General Michael Flynn came out, and we did the grand opening event, and there was a ribbon cutting and some confetti cannons and some really fun stuff so now, actually, just before I jumped on here with you, Nick was on Fox Business with Michael Payne, because they called him up and wanted to do a quick interview too. So, we really just see this movement of people locking arms and starting to work together in supporting each other's value systems. And, the fact is that Nick actually got debanked from Chase and Bank of America back in 2019. They just sent him a letter and said, "Yeah, you have 30 days to move your money." And Michael Payne brought this up on Fox Business. He said, "Well, we called them, and they said it was for legitimate reasons, but they couldn't tell us what those were." And I said, "Yeah, that sounds about right. That sounds about right." So we want to be a place where, 10% of the bank's profits or the fintech's profits are going to be going back towards life-giving organizations, not just, on the abortion side, but what is life-giving, right? The Bible speaks about having life and having life abundantly. So where else can we sow into that's giving life all across these different nonprofits? So it very much intertwines with our business. Their website says banking with purpose. Ours says investing with purpose. I don't know where they got the idea, but yeah, it's just
someone was at the table when they were creating the motto,
just being purposeful and intentional about, where your money's going. And we run a donor advised fund where we funnel our profits back to a donor advised fund that goes off into these different nonprofits, back into our ministries, back into our tenants and things like that. Mm-hmm. And I encourage other operators, regardless of your worldview, right? Like, you should think through how to be intentional about supporting the things that you believe in. Right. And it just creates such a better story for you and your investors. Like, yes, we're all chasing return, right? But why are we chasing return?
Why? Mm-hmm. That really matters a lot. How you treat people, it affects your reputation. It affects that, that precedes you when you're meeting new people, but it's just the way you help the person who's right in front, right?
Yeah.
And whether that's the apartment dweller, whether that's a broker that you're working with, whether that's an investor that you're working with, What's one way that you like to build trust, and that it's kind of your way of doing it?
I think just communicating transparently about failures is a really good way to build trust. I think as operators, as entrepreneurs, we're always, thinking how to not like tout the failures and always making it see this like perception of perfection. But that's not reality, right? And everybody knows that. So I think you start to get a little bit of a sniff test when people feel like everything's good all the time.
Everything's up and to the right,
Yeah. And I talk transparently about my past too. I came from a household that had nearly 7 divorces between my 2 parents by the time I was 14 years old. I've buried my 2 older brothers, one from alcoholism, one from kind of a freak medical accident. I buried my dad, who adopted me before I was 30. So there's been a ton of challenge in my life, but I feel like sharing those stories help people recognize that, one, I'm resilient. Like we're the guys you want in the corner when things are going bad because we bounce back from them. But also just being transparent about like, hey, we didn't have the best, we're not Harvard MBAs. Like, we're dirt guys. We flipped 1,000 houses before we bought $500 million worth of real estate, and we're just going to talk to you about what is going right, what is going wrong, what are we doing currently to switch it from the investor side. So, and then doing what you say you're going to do. I know that this is a silly one, but we named our company, Integrity Holdings Group 15 years ago. And I knew we were going to catch flack for it. And, because people are like, oh, you shouldn't, if you have to say your name is Integrity, you don't probably have any, or, And I would always tell people, like, I didn't name my company for you. I named it for me because I answer to an audience of one. And by having a name like that means I have to make sure that I'm doing things that I'm comfortable answering for in the name of integrity at some point. Yeah. And, initially it created some challenges with people, but now I think it is, we do what we say we're going to do. Yeah. And it's not always easy, and business is not, so I think talking to people about challenges that you're having when you're having them, being transparent about how you're fixing it, and recognizing that there is no such thing as a perfect business record, right? You're just trying to minimize losses and maximize wins.
What's a good way for someone to kind of get into your ecosystem? I mean, of course, LinkedIn, but you've got a great book.
Yes. You can go to investingwithpurpose.org and you can sign up for our investor club. You can learn about all of our projects, learn about the ministries that we're supporting and things like that. I think you can order the book from there as well. You can listen to the podcast. So the book is Investing with Purpose. The podcast is Investing with Purpose. We try to make it easy for you guys to remember who we are.
There you go. Well, Steve, thank you so much. This is such a rich conversation. We went in so many good directions, and I hope it helps someone just take something and just run with it.
Awesome, man. Yeah, thank you so much for doing this. Thanks for having the podcast, and thanks for inviting me on.
Absolutely. When you truly align your core values with every aspect of your business and your life, you don't just sleep better at night, you attract the right people onto your team. And together you have the greatest impact. The point isn't perfection and doing it right away, it's the progress and intentionality. If you want to learn more about Stephen, I encourage you to go grab his book on Amazon, Investing with Purpose, and check out his podcast, investingwithpurpose.org. So don't just let this be another podcast you listen to. Like, actually take something, run with it, and let me know. Until next time, keep it simple, Saints.